Hello viewers, welcome back. So this is part 12 of our series of session on F12 configuration for inventory master. In the last session, we saw various costing methods, how you can define them as default costing method for any of your stock item that you would want to change from the Tally's default costing system of average costing. In this session, we will see the various other market valuation methods that Tally provides, and also we will see and understand the relevance of these market valuation methods to be set up and how you can use these configurations for various inventory management analysis, and also view your inventory values with various costings so that you would know that what is the amount of working capital that has been blocked is one aspect that you can see. The other aspect that you can see is that what is the value of stock that you are holding, which is got an amount of profit comparative from your costing method to your market valuation method. So we will see all this in this session, and this will be the last session on F12 configuration for masters. And in the upcoming sessions, we will cover F12 configurations for transactions or for voucher entries. Now let's go to Tally and explore the other market valuation methods. So in the last session, we saw the costing method of setting it to standard cost, and we also saw how you can specify your standard cost for your item periodic wise. Okay. Now let's come to the market valuation method. By default, Tally gives you the average price. Now when you press space bar, you are now going to get these options for market valuation method. So one is at zero price. So this is exactly like the concept that we understood in the costing method of zero cost. Okay. So you can set up at zero price. Basically, again, you can set this at zero price for your fixed asset item, right? So that, these items do not form part of your inventory valuation. Then the average price. So basically, it's like your average costing. It is going to take the various rate at which you have sold your item, and it will take the average of those rates at which you have sold your item, and it is going to apply the average rate multiplied by the quantity that is available in stock. Then again, like the last purchase cost, you have last sale price. So if you want to see the value of your inventory as per your last sale price, you can apply this. And this is this default that you can do. See, basically all this, the zero at zero price, at average price, at last sale price, everything you will get it automatically. You really don't have to go and set up the market valuation method here as a default market valuation method. The only thing that it will be helpful for you to set up your own standard price and value your stock item based on the standard price. You can now configure the market valuation method as the standard price for the item. So we will see when we go to the reporting, we will see how this is going to help. All other thing you can actually by default, all of you know that the stock value is always done at cost, right? So at no point in time your books of account will reflect your value of inventory at market value, right? So it never report at the market value. Everything is going to be at the costing method. So that is why setting up your default costing method for your item has an impact on your inventory valuation. Market valuation is basically an creating a what if scenario. Just to give you an example, let us say you want to see what is the value of your closing stock as per the average costing. So let's say, as per average costing, the value of your closing stock as on a given date is say 10 lakh rupees. Now you can compare this with the applying the value of market valuation method of, let us say, average price. So based on the transactions that you have made in your sales invoice for any given item, Tally is going to compute the average price. So now you can bring this additional column and you can compare. So your value of inventory as per costing method is 10 lakh rupees, and your value of inventory, if you apply a market valuation method of average cost, let's say it is going to show 12 lakh rupees. So what do we infer from this? So the whole idea is that you are sitting on 2 lakh rupees profit on these items that you are holding as your inventory. So this analysis will help you to quickly devise a method in your organization so that you can quickly dispose of these stocks and then get that profit which is lying in your item. Okay. So we will see more options when we get into the reporting part. So uh, providing standard price is what is going to really help you here. So for that, first, let us say that you will go back and see whether you have entered the standard price. So I have already entered the standard price here. We saw last time standard cost as 37,000, and here standard selling price. Again, you can specify the applicable date from whichever date you want. And I have mentioned the standard price as 45,000 rupees. Okay. So I'm going to save this, and we will say that the market valuation method, you want to value your inventory using the market valuation method of standard price. So I have set this here and I'm going to press Ctrl A. So whatever is the market valuation method that you are going to specify for the stock item as default market valuation method is not going to reflect in your inventory. Just now I mentioned about it. So all this is at the costing based on the various costing method that you have applied as default. So just to recall, if you notice the Dell lap i3, we have specified this costing method as standard cost, and we had specified 37,000 rupees as your standard cost. So that is why you are seeing here 37,000 rupees reflecting as your standard cost. Now, if you see on the right hand side button bar, your secret number 1, there is this option of valuation. So just click on valuation. So you have these various valuation methods that you can apply for the report, and these valuation methods that you are applying in the report is only to give you the information based on the valuation method that you are applying on a temporary basis. So which means any valuation method that you would want to select to see the value of your inventory will only apply as long as you are in this particular report. The moment you escape and come back, system is going to show you the default costing method that you have applied for each of the item. So that is where you also have this default. So for example, let us say you want to apply average cost. So we saw in Dell 37,000 is my standard cost. So I say average cost, and you will notice that all item is now going to display with average cost, even though you have specified for Dell laptop as your standard cost. So this is how the valuation will help you to value your inventory based on this various valuation method. The other analysis that you could do is that so this is the average cost which we have set up now. So let's just say that I just go back and then come into this item, and you will notice that it's back with 37,000, which is my default costing method that is set in the master. Okay. So now let's say this is my costing method. the value of my inventory is 92,31,250. Now I want to compare this value with my market valuation method just to see what is the amount of profit that is getting hidden or blocked inside the value of my item. So what we do is you can select new column and the date can be the same, and here you have the valuation method. So here in the new column, again you can select what is the valuation method temporarily that you want to apply to do a comparative analysis of your inventory. So let's select average price. Okay. So we selected average price, and you will see here that you have at cost 92,31,000 is there, and the average, if you apply the average price for all your existing closing stock that you are holding as on date, you have 1 crore 15 lakh worth of. So the difference between this is the profit that is lying in these items that you are holding. Now, how do you know that? What is the valuation method that you have applied? If you come here, just below the period, you will see the valuation method that is applied. So this is your default. So it is just going to say you will not have any title because this is your default report. Now you have added this new column to compare with the average price. Now this is where if you provide standard selling price for your item, you can do this comparison based on the standard selling price that you have specified along with your costing method. Okay, so let's now delete this column. So you just come to this column. I can delete this column, or I can alter this column. So we have seen this earlier videos, right? So let's say that I want to alter this column. So I go to alter column. I'm going to select everything, and here now I'm going to alter the valuation method of this existing new column that I have added. So here I want to say standard price. Okay, enter, and you will notice here that Dell laptop i3 is giving you 45,000 as your standard price, and this is your standard cost, which is your default. So the difference is what is the profit that you have in this particular item. So if you notice here, we had specified the market valuation method as standard price. It really doesn't impact your books of account, but what we have done is we have specified the standard selling price as 45,000. So that is what we are seeing here as 45,000. Even though we have not specified any standard selling price for your other item, Tally will pick up your last sale price and it will apply for your standard price. Unless you go and specify the standard price, then whatever is the standard price that you have specified will get applied here. So this is where, if you really want to compare with a standard price, whatever that you want to have the standard price for that item, and that is where it is going to basically help you to get your standard price. Now if you see the Dell laptop, the standard price is 45,000, which we have entered. But if you see the outward, that is the sale that has happened, if you see the sale is happened at 36,000 rupees, right? Since we are comparing with the standard price, it is ignoring my last sale price and then it is picking up my standard price. So that is the advantage of specifying standard price and viewing your inventory value for your comparison purpose. So you really don't have to do this adding every time, keep adding multiple columns to do a multiple analysis of various costing method. So you have an option here in Tally, which is, I again come back here. So this is the default. So now instead of adding new column manually and selecting different valuation method for your various analysis purpose, you can come to auto column, and in the auto column you have this option called stock valuation method. So enter. So now by default Tally is going to apply all the standard valuation method that Tally provides, including your market valuation method. So the first column, it says it is the default, whatever is the default that you have set for your item. Then it's showing you FIFO wise. So you will see the difference in the inventory valuation based on different valuation method. So default is 92 lakh, FIFO is giving 97, and LIFO perpetual is giving you 80, 87, 99. You can see the variance here. And then LIFO annual perpetual, because there is only 1 year data here, it is going to be the same thing. Then as per the standard cost, whatever standard cost you have specified, it is going to give you the value here. Then the average cost is, this is the amount it is going to give you here. Then you will notice here there is a right pointing arrow which says 5. That means 5 more columns are hidden there. So all you need to do is just take your cursor to the right hand side, and then you will see now last purchase cost. You will see your standard price. In the standard price is where your 45,000 that you have specified is going to get displayed here. Okay. Then you have your average price, and then you have your monthly average cost, last sale price. It is going to pick up. So if you notice here, the same item, Dell laptop i3, okay, standard price, it is telling you 45,000, right? And your last sale price is 40,000. So this is how you can apply, these various valuation method for various analysis and pricing of your product, and lot more things that you can do with the help of this MIS reporting. I hope these costing methods would definitely give you insight about how you can handle the costing method or use the market valuation method for various analysis or analytics purpose. And with this knowledge, I hope that you can now manage your inventory valuation better and the way you wanted them to be managed. So as mentioned earlier, so from the next session onwards, we will get into a new series of again F12 configuration for your transactions or vouchers. So thank you all once again for staying till the end. See you all in the next session. Thank you very much.